And Jayakumar, MD at Prime Securities, joining us this morning. Mr. Jayakumar, your first take with regard to the budget, especially with regard to the fiscal situation, the gross borrowing number. What do you make of that number? Because you will likely see a reaction to that number this morning on bond yields.
Yeah, good morning and thanks for having me over. Yes, I think that number did initially spook people, but I believe there is flexibility available. It could, to my mind, promote some kind of fear, if you will, that yields could inch up. But I think that could be a short-term kind of move. My own assessment is that the budget in general has been conservative on most estimates. The borrowings, I think, may not come in at those levels, or there may be some RBI action which essentially makes sure that the yields don't go up to those levels. A few basis points this morning, perhaps, but I think that will get, in that sense, bought into as far as bonds are concerned.
Jakes, the RBI, MPC is meeting this week. Do you think that there will be measures to ensure that there's enough liquidity and a status quo with respect to maintaining the yields at current levels?
Absolutely, no question about it. If anything, I believe that the number may include some swaps which the RBI could do, and that's why I feel that the RBI's sort of focus on inflation, while that has been the sort of focus for a while, but on ample liquidity is an equally important focus. And I think there will be more than adequate liquidity that will come through. It was already preambled, if you will, from a budget perspective, because they announced measures a week ago, and they'll be there for more if required. So I don't think liquidity is an issue, and I'm not sure if the inch up in yields this morning will be sustained.
Jakes, if you look at the Capex numbers, they are pretty much in line or little ahead of the street estimates, especially defense one coming at 18%. You have nearly 8% railway Capex, 10%. Then you have roads at 8%, railway at around 10-11%, and overall Capex jumped to 12.2%. The theme of Capex is continuing for us, and government is pushing the pedal as far as public sector capital expenditure is concerned. Do you think private sector will now come in? Because we're seeing some green shoots happening to some of the numbers that came in from Q3.
I think private sector has been coming in, albeit not at the same pace that the government has wanted. I think the government push now will be a lot less than what it was last few budgets, and I think private sector will step in. Liquidity is ample. Measures have been made by RBI, including things like foreign money for acquisitions and so on and so forth. So liquidity under multiple heads will come through, and I think private sector. I'm not sure if it will unleash, as they say, the animal spirits, but definitely they are more prone to making investments now than they were 2 years ago.
Jakes, hi, morning. What is it that you're making of the hike on STT on derivatives? This is, of course, bound to impact volumes, right?
I think the stated objective, if you will, was that this should be a deterrent for individuals to come through. Now, there's no sense in touching your nose by, contorting your hands, as they say. If you don't want individuals to come through, increase the lot sizes, increase net worth available, or sort of the net worth criteria for allowing people in the F&O market. But increasing costs is not the way to do it, if that was indeed the objective. And certainly, if it was meant to increase revenues, that's not going to happen either. So I personally believe it's much like it's almost like a speed breaker on a highway. You don't expect it, but it comes in, you have a little bump and you move on. So I think too much has been made out of it. And if yesterday's sell-off at some level was, the fact that the government keeps sort of doing these kind of things, I think that's a little overreaction. My own feeling is that the STD thing could have been avoided. But then, in life, there are a few things that you can't avoid. It's like walking on a rainy day and, getting your clothes soiled by a passing car, which gets into a ditch or sprays you with water. It's unfortunate, but it's there. I mean, we should just move on. I think too much has been said about it, and if that's been the reason for the sell-off yesterday, that's unfortunate.
But Jakes, to move on, what kind of triggers, or rather what triggers right now in this current day and age can the market latch on to?
Issues, it's not about a market moving up that we are concerned about. as stock pickers, you need to see individual spaces. You need to see if there's been any particular headwind that's been created as a result of the budget. And I don't think that's the case at all. And by the way, while enough has been said about the STT, what has not been said adequately is about the the GST removal on brokerage that foreign investors pay. I mean, that's also a cost, and that's been eliminated, the 18% cost on brokerage. Now, in terms of specific triggers, I think budget's never been one that changes courses, the direction of a market. I think we need to look at individual spaces. I think, having said that, the budget specifically focused on stuff like biopharma, the 10,000 crore fund, talked about services, talked about data centers, the digital highway. These are all extremely positive steps, and you can sort of hunker down and get into individual stocks to look at for each of these spaces. So there will be sectors that, as I mentioned to you, which will get benefited. The financials sold off a lot yesterday, and my own assessment is there's nothing that has changed financials or the trajectory of public sector financials specifically, which they thought may have to cough up additional investments into the borrowing program. So if financials are fine and some of the spaces or new age spaces, which let's say border on either AI or machine learning, whether it's data centers, networking, semiconductors, etc., I think there are spaces that you can go into. And there are spaces like the pharma industry, which has not been affected. Now, the rupee opens weak, and the one de-dollarization theme, which people talked about, has been commodities, and you've seen the way silver, gold, etc. have rallied. But the space that has not been talked about is the currency space. And there's been a near structural change in the levels of whether it's the sterling versus the dollar, or it is the euro versus the dollar, or indeed the rupee versus the dollar. And if you see the euro rupee, for instance, has moved close to 30% over the last 18 months, as indeed as the sterling. And these are huge markets where spaces, whether it's IT or pharma, etc., supply their services into, services and products into. The difference is on the IT side, because you're selling into large corporates, they adjust based on the depreciation that you already earned. Whereas in the case of pharma, that's not necessarily the case. So there have been near permanent increases in margins for several pharma companies, especially the generics. But that's nothing to do with the budget. So you go back to basics by taking some leads on what the budget has indicated. And there I feel, whether it's the infrastructure play around telecom or the digital highway or biopharma, etc., themes that you can latch on to. But you go back to stock picking. Budgets have never been about hanging on to what the finance minister said necessarily 48 hours after the event, and we are 24 hours already there. So my own feeling is by the end of today, you'll have to go back to good old boring stock picking, and that's the way forward.
Okay. Mr. Jayakumar, last question. This STT on futures and options, do you believe it may adversely impact Indian markets from a depth perspective and from an efficiency perspective? Much has been said about this, that FNO adds more efficiency to the Indian markets. You believe that the thinner volumes likely as a result of this STT and the higher cost which is getting saddled, due to which certain participants may actually slip away, may actually make our market slightly more inefficient, if I can call it that?
Those who want to trade in F&O are not going to be sitting in, they probably don't even know the cost they're paying today. And those who believe that they don't want to trade, whether there's an extra STT or otherwise, these are not reasons to latch on to. So I don't believe it will have any impact whatsoever, other than some arbitrage funds returning maybe 15 to 20 basis points less because of the churn that they have and therefore the higher STT that they pay. But other than some arbitrage funds returning less, I do not believe they should have any impact. And frankly, there's too much airtime that's already been given to what I think is a non-issue in large measure.
No, sure. Thank you so much for coming in and speaking with us, of course. But that clarification was just something that I was trying to kind of get as to whether that impacts our markets at all.
I don't think
But thanks so much for coming in and speaking with us.
Thank you. Thank you.
All right.
Yeah.
All right. Thanks so much. What we'll do is slip into a very short break. On the other side,